Well, a warm welcome to our September 2025 Investment and Economic Snapshot. I'm Joel Carty from Solace Financial, your personal CFO. Let's take a few minutes to unpack what's been happening across markets, central banks and policy, and what it means for your financial strategy. Let's look at the markets in a glance. September delivered mixed results. Global equities posted solid gains, led by emerging markets, while Australian shares saw a modest pullback. Gold surged, bonds held steady, and central banks took defensive paths on rates. With global equities, emerging markets were the standout, up over 7%, driven by a strong performance in Asia. Tech and semiconductor stocks led the rally, with Taiwan Semiconductor, Samsung, and Alibaba benefiting from a surging AI and chip investment. In the US, the S&P rose 3.6%, Nasdaq jumped 5.6%, and small caps gained ground. Europe also delivered, with the Euro 100 index up 4.4%. Overall, global equities remain supported by resilient earnings and easing monetary policy. With Australian equities, locally the ASX dipped 0.54% after high records in August. Energy stocks fell by 10%, and the Big Four banks declined amid rate concerns and the soft consumer sentiment. The gold producers rallied, and small caps outperformed, up 3.44% for the month. With commodities and bonds, gold had its best month in 14 years, up 11.4%, driven by investor demand, a weaker US dollar, and concerns over a potential US government shutdown. Crude oil fell again, pressured by oversupply and a weak Chinese demand. Bond markets were relatively stable. US 10-year yields dropped to 4.15%, while Australian 10-year yields edged up to 4.31% on stronger inflation data. With central bank moves, in the US, the Fed cut market rates by 25 basis points, citing slower economic momentum and rising labour market risks. They've signalled 2 more cuts by year-end and remain data-dependent. Here in Australia, the RBA held rates steady at 3.6%. Inflation surprised to the upside, and private demand is rebounding. With household incomes rising and the housing market firming, rate cuts may be delayed. With policy and legislation updates, there are a few key developments to note. With legacy income streams, the Department of Social Services confirmed that certain legacy income streams will retain their asset test exemptions. This is great news for retirees relying on TAPS and lifetime pensions. With aged care reforms, final aged care rules have been registered ahead of the new Act commencing on the 1st of November. 2 bills have now been passed and await royal assent. The gnarly amendments, the ATO updated rules around non-arm length income, important for self-managed super fund trustees managing contributions and related party transactions. So what's on the outlook and strategy? Markets remain supported by strong fundamentals and easing policy, but uncertainty always lingers. Geopolitical tensions, uneven growth, and policy shifts all pose risks. In this environment, a patient, flexible investment approach anchored in fundamentals is essential. If you'd like to review your investment strategy or discuss how these changes affect your financial position, reach out. Whether it's retirement planning, aged care structuring, or building a portfolio for growth and income, we're here to help guide you every step of the way. Until next time, we'll be watching.